Good morning, traders. I'm Dennis Dick.
And I'm Joel Elconin. Welcome to Pre-Market Info.
Well, we did get that rally yesterday that I thought we might get. Didn't quite get to positive. Overnight, we actually traded up to 1655, so we were a little bit higher there last night, but now we've turned around and sold off. It's been a pretty wild range, actually. High 1655.25, low 1638.75. Joel, that's a 17-point range.
It is a huge range. Got up near the intraday high from yesterday at 1654, and Wednesday's close was right there. And then the market just got nervous. They took it down under the 1640 level. Would be interesting to see if we get to that 1632.75. That's yesterday low, but I think you're going to see some bids stepping out ahead of that.
You're seeing some bids step out in Procter and Gamble right now. This is an
Holy
incredible
mackerel.
move here this morning. Bob McDonald, they announced last night McDonald's retiring June 30th, bringing back the old CEO AG Lafley. They reaffirmed Q4, which I thought they did a couple of weeks ago, and they reaffirmed their full year outlook. UBS upgrading the stock, so lots of good news here. Price target UBS got giving it 95. This is an incredible move for Procter and Gamble. It's taking out all those key resistance levels, getting actually up and above right now, or getting very close to where it was trading a month ago. It's trading at 82 on the Kisser right now. A month ago, it got up to 82.54. Well, actually, it was April 23rd. So, yeah, almost exactly a month ago. 82.54. Looks like that's where they're trying to press it to here this morning, Joel.
And how does this change earnings for the upcoming quarter is
Well,
what I want to know.
Well, they reaffirmed Q4, so they're saying that they're going to
Right,
hit those
okay.
estimates. But I agree. I think it's maybe a little bit overdone, but I just the way this market moves, it seems like when a stock gets momentum, it continues to run, and if you're fading those trends, it continues to seems to push. It's all about kind of the market type that we're in, and we're still in this momentum market. When it starts rolling one direction, it rolls that way for quite some time. And Procter and Gamble is now rolling to the upside and approaching new all-time highs.
Well, I was playing the 80 weekly calls and that last week. I kind of wish I would have stuck with that
Oh,
theme this
you
week.
want to,
And I
yeah.
tell you, if I did, I would be dumping them on the open here, or very close to the open. I mean, up 331. I mean, is some decent volume in this, but once again, you have a scenario where Pfizer the other day, they spun off the Zotis. It got a nice pop off it and then came right back down. So maybe not today's the day to short it or to, but I definitely, if I was long coming into this thing, I'd be looking. If it got up for sure near 82.51, which the all time high, I'd be looking to. I don't know. I'm licking my chops on this one. I just think it's way overdone.
Well, it's at 82.0 run right now. I'd be surprised if I think it could you get a lot of orders on the NYSE open book there that are active at 9:30. That could hold down the open a little bit, but I think during the regular session, I think they will try to press this through 82, and I think they're going to try to press it to that high. Probably tick the high or something and then turn around. But 82.54 is the all-time high. It's 50 cents or 70 cents away from there right now. So I think that's the target that a lot of people are going to try to press this up towards. Lots of earnings here last night reporting. Might as well start with Pandora because they reported. It seemed like an okay quarter to me, but they're really buying the stock. 10 cents versus, or loss of 10 cents versus the analyst loss of 10 cents. The revenue looks like it was okay. The full year guidance was to lose 2 cents or possibly make 8 cents. That's the range that they've given. It doesn't sound that great to me, but RBC must have liked it because they're upgrading the stock this morning. And the stock is absolutely flying here, making new highs, trading up at 19.19 right now and a quarter of a million shares.
Right, got to 1944 on the initial pop, and then just a little bit ago we hit 1955. So those are some identifiable resistance area if you're looking to take profits. We have nothing here on the daily. Let's take nothing on the weekly here. Let's just try
2011.
the monthly. Yeah, the monthly. I mean, you're getting into the area when it got whacked off the IPO. I mean, wasn't the stock supposed to be for dead? I believe on this day when Google came out and announced that they were having some competition. Well, I guess not here. Double bottom there at the 1380 level and was off to the races. This one's a tough one to call, but I would just keep an eye on the 1950 level coming back down. I think if we slip under $19 this morning, I'm not sure I'd still want to be long this issue.
Yeah, and looking here, 19. I think if it started to pull back, but then you start getting up and you think about that $20 level, and just going to reiterate how they like to push it up to certain numbers there. And it wouldn't surprise me if they try to continue to press this thing. Once it starts getting close to those big whole numbers like that, they like to press them up there because I know they get some stops. So we're 19 and a quarter here now. If you're sticking with the momentum, you never know. This could see 20 today. Joel, we got a couple other ones here too. ANF reported here this morning, which is Abercrombie and Fitch. The stock is trading down significantly on their report. They lost 9 cents, supposed to only lose 5 cents. The full year guidance 315 to 325. Analyst estimates were up at 349, so that's going to miss for the full year as well. And they are taking the stock and beating it here this morning. It's down almost $6, trading at 48.70 after closing at 54.37.
The low so far for the pre-market session's been 47.52. But you're getting a pretty identifiable trading pattern here, really over the last half hour, 45 minutes, really topping out at the 48.80, 48.90 level. So I think as long as we hold below there, I think we could be poised to go down and test that 47.52. I think we break above this 48.90 level. You got a lot of real estate here, up to at least $50. The guys on the desk were just panning this stock. They're like joking about it, like who shops there anymore? And the stores smell like too much perfume. So I wish they would have been talking about this yesterday because I would have been buying puts on this thing. But I hate all those stores anyways. I never, if you see the way I'm dressed, you can tell I don't go to those stores very often.
You're not cool enough for Abercrombie and Fitch,
No,
Joel?
I'm not. I'm not. Take a look though. 47.82 was the low on April 26th.
If it cuts through there, then it's a slippery slope down to that 46 area.
Yeah, but boy, this look at this, chugging along, coming back, get $9 back, and then va-voom.
Giving it all back on one report.
That's why you got to sell this crap. If you got good,
sell this crap. I'm sure Abercrombie loves you. I'm sure Abercrombie loves you calling their stock.
Oh, I know you're sitting there with a little A&F on your.
Oh yeah, you get that. Oh yeah, I'm all decked out in A&F here, sitting here.
Your pink polo was dirty.
I like the 45, 46 level. If we pull back another $2-3 from where we are right now, I might get interested. But until then, I'm sitting on my hands on this one. The Gap. I'm all decked out in Gap here too, Joel. GPS reported earnings. Some other people obviously aren't because stocks trading down here. They actually beat 71 cents versus their pre-announced range. They already pre-announced earnings, 67 to 69. So we kind of knew they were going to come around here. But then full year, they're going to, looks like they miss estimates too. They're going to miss estimates. 252 to 260 is what they're saying now versus 272, and that is what's knocking the stock back down. 42 is an absolute monster number here. It never sniffed up there yesterday. Got as high as 41.86, I believe, actually. That might have been a couple of days ago. Got as high as 41.86. Never sniffed up, though, in the pre-market or after hours here after they've reported, and it is trading down almost $1 now.
The initial spike took it down to 39.31. Kind of had some crazy activity in the stop after that spike. Got back over 41 to 41.36. But I'm much more comfortable looking at this chart from a daily perspective here. You did have the gap up, and you've been holding the $40 level for several sessions. 50 cents above that, you still have to respect that level as support. I think you break that $40 level and you see the real estate there in the 39 handle, similar to what it did in the pre-market. Coming back on the upside, we're trading on yesterday's low, but I think if you start to sneak in the 41 handle, 41.04 was the close on Wednesday, 41.36. I think after the stock trading down so much lower, why not try? People will be praying to get out at their mark.
Yeah, I think so too. I think this thing sniffs up. So we agree on something here, Joel. I think this gets into the 41s. I think you find some sellers. And I am eyeing that gap in the gap chart. That gap between basically 39 and 40. So if this stock starts slipping below 40, there's a lot of air in that 39 handle. Salesforce.com CRM reports earnings 10 cents versus 10 cents. The revenue really light though, 839 million versus estimates of 887 million. Full year guidance 47 to 49 versus estimates of 49, so they're kind of light there. And Wedbush downgrading the stock this morning, so lots of bad news for CRM. Stock trading down $3 this morning.
Yeah, finding a little love here around the $42 level. Got down to 41.91 here around the 7:30 session. When we came back down around that area again, we could only get to 42. So someone's identifying that $42 level as a place to cover some shorts or try a possible long. And then 43 has kept the lid on it here since the market opened at 4 a.m. this morning. Looking at the daily chart here, the stock had a nice day yesterday. I guess people change their mind in a hurry. Really wouldn't be looking at a gap situation. If you can come up and tick 43, get above 43, you start to work your way into yesterday's range. Coming back on the downside, the $42 level is reinforced by the May 3rd low of 42.06.
Sears Holdings disappoints. Surprise, surprise. Lose $1.29 versus supposed to only lose at 65 cents, so major miss there. Same store sales down 3.6%. That's not good news either. Shares getting pummeled here this morning, down 14%. 49.90 is where we're trading. I'll let you do the pre-market talk, and then you're going to find a level that I'm eyeing too, and we are dang close to there.
49 and a quarter here is what we hit. Since hitting that level, you bounce up to the 50. Gonna go to daily here, and so
You knew
$50, man.
49.80. We're
Yeah,
there
look at
right
that.
now, and that is actually, if we go back to those charts, on the 29th, we had a low of April of 49.80. On the 30th of April, we had a low of 49.81. On May the 1st, so 3 consecutive days, we had a low of 49.83, and then we broke out from there. I gotta think that might provide you some support here early in the trading. Obviously, if it takes that out, then all bets are off. But that
Hey
49.80.
guys, got to cut you off. Durable goods orders coming in. We got April durable good orders, ex transportation. As for March, they're revised down 1.7% from down 1.4%. March durable goods orders in general were revised to minus 5.9% from minus 5.8%. So as the March numbers revised down. April durable good orders were up 3.3% in April.
And the
So that's
market's
the
liking that. Yeah, the market's actually rallied 3-4 points here. We were down 7, now we're down only 3, so we rallied 3-4 points on that news. Thanks, Jake, for breaking in on that. So market getting a little bit of a lift here off of those durable goods numbers. We were just saying on the Sears Holdings there, Joel, both of us were eyeing up that 49.80 level, and interesting enough, when a stock falls $8.50, and it's actually sat here and started consolidating right here around that 49.80 level. So it'll be interesting to see if this level can hold.
Right, and one possible way to play this, and I know we've discussed it before. If you're not, prone to be playing things right off the hop and right off the open, where there's really not much liquidity, and we can go into that in a second. Let's say you open up there at that 50, and then you spike down to 49.10 or 49.20, and then all of a sudden things turn around and it comes rolling back up to that 50 level. If you're quick, you can maybe play it that way, playing on the
Safer
momentum
way.
up. Yep. I mean, and then use use the reference point of that initial low. But I mean, all we do is we talk about these kind of technical formations here, and the $50 level in Sears is going to make us look really good or really bad.
That's a big key level. You did hint at liquidity issues, and we might as well talk about what happened yesterday morning. We actually did a video on our premarketinfos.com site, so if you're interested, you can check that out on liquidity. But AEP NEE had flash crashes yesterday morning, and we're just looking at the chart here, and AEP went from $48 a share down to $22. This is a utility company that typically doesn't move, and came all the way back in the next second to 48. NEE, just to tell you the tail of the tape, did something similar, went from 78 bucks, traded all the way down below 35, and then rebounded immediately back to 78. This was all in the opening minute yesterday. This wasn't news, it wasn't anything like that, it was completely market structural. Basically, what we've been saying for a long time is liquidity is very low off the hop. Market makers are scared to make markets in the first few minutes because there's unknown. They don't know. Most of your high frequency market makers make pennies on their shares. They're just scalpers. And when you can lose potential, a lot more than that, they're scared to make markets. We don't have traditional market makers anymore, so liquidity is low off the hop. What happened is, should I go right into the whole market structural part of it with the LRPs there?
Yeah, I'll let you go on a little market structure rant, but I might cut you off.
Yeah, cut me off when I get too long in the tooth, so I start going like this. But anyways, NYSE had these circuit breakers that would stop this stuff from happening. So basically, you had a big sell order came in on the NYSE, wasn't the liquidity to absorb it, and it just tanked. NYSE used to have circuit breakers called the liquidity replenishment points, which were LRPs. That basically when a stock would fall, say 1 or 2%, it would hit this LRP where it would actually halt trading for a split second, let the guy on the floor who was the designated market maker step in to provide liquidity to that huge sell order. Well, in the last few weeks here, the SEC wanted them to get rid of their LRPs because they're moving to this whole new circuit breaker system called limit up, limit down. Basically, this limit up, limit down is only in phase 1 right now and doesn't cover trading in the first 15 minutes yet, just because they're phasing it in. It will eventually cover that. So right now, basically, there's no circuit breaker on the NYSE in the first 15 minutes, and you see these little flash crashes. We saw APC last week go from $90 a share, trade to a penny, 1 cent a share, and all the way back to 90, just because there was a lack of liquidity. So here you just basically don't have a lot of liquidity in the opening few minutes, and you don't have any circuit breakers right now, which we had before protecting us. So that's why you see these mini flash crashes seem to be happening every day in different stocks.
Right, and just let's hope that we don't see something happen this in a multitude of stocks, or
Yeah,
you will have,
and it could happen.
You will have.
Yeah, it could happen in a lot of stocks, and it's a sad thing to see happen because somebody sold the stock down there. If you had stop orders, and this is what we want to take from it, if you're using market orders in those first couple of minutes, be very careful because things can happen very quickly in these high frequency trading world. I never like using market orders. Use a marketable limit where you're setting a price at least, because you don't want to send a market order for a stock thinking you're going to sell at 48 and you sell it at 22. And also be careful with your stop orders, because those stops sometimes, if you had a stop on the book at 40 bucks, you probably got triggered and probably sold it near the bottom, and then it's back at 48 a few seconds later and you're kicking yourself.
Yeah, I'm just interested to see what the backlash is going to be from the retail world and people that did have stops.
Some people got screwed.
Yeah, it would be very interesting to see what comes out of this and what the SEC does to rectify the situation.
Yeah, so that's our little market structural talk there for you guys. We're trying to wake you up here in the morning. Did want to actually go back to Jake here. He had a little bit of discussion. There was some solar news here, which he's surprised isn't really affecting the stocks. Jake, are you still there?
Yeah, absolutely. I think everybody out there probably knows how volatile the solar stocks are, and so DigiTimes this morning, or actually last night, reported that U.S. new solar installations may only reach the 3.5 gigawatt point. So it's a little bit of a bearish indicator there, and with how volatile they are, usually they'd be bouncing around. So I see you got a Solar City up there. Not really seeing any movement there. We haven't really seen any movement in Tango Alpha November. That's TAN. That's a solar ETF.
Right.
We're keeping an eye on all this because it seems to be a fairly bearish headline there. We'd be expecting some kind of movement. Not really sure why there's not really a reaction yet.
Well, and the funny thing is the stocks are actually trading higher now. We've got First Solar trading up 87 cents at 52.45. We've got SCTY, which is Solar City, trading up $1.26 at 48.05. The market's down 5 points. These things are actually showing some relative strength there today. But these things are always volatile like crazy. I almost think some of these stocks is like going to a casino when you're trading these things, because they do trade on headlines, but they're crazy off technicals too, and they move very, very quickly. I don't know. We're trading higher here, though. Jake, do you think this is going to hold up?
I'm wondering if just because there's the headline out there, all it says reaching 3.5 gigawatts, it might traders might not be noticing they only is in front of that rather than may reach, so they may be misinterpreting the
Or
headline as
maybe some people
bullish.
thought they weren't going to be that high. That's
Yeah,
a
that's quite
3.5.
possible. So, but again, you're completely right that they're incredibly volatile. So, we're just going to keep an eye on that sector today because I think we're going to get some action there.
Well, maybe we'll do a quick
Okay.
technical on a couple big ones there. First, solar there, Joel. Do you want to start with TAN? We'll start with the ETF. He's got the TAN chart up there. What do you think on the
Yeah.
technicals on this one?
This is a tough one. 2450 was yesterday's high and haven't really got up to that level yet. I keep an eye on it here. If you break through that 2450 area, you do have real estate up to the $26 level. I don't know. When you kind of have that gap coming off a big high like that, though, I think you're going to find sellers, with the quarter, half, and even numbers. But I would use this 2450 as a swing number. Looking at the first solar, I mean, the stock has had a monster run. You got a lot of people short. It's still been hugging the $50 level. 49.50 was the low from yesterday, and keep an eye on yesterday's high, 53.10. We haven't got there, and then just crazy. These are pretty volatile stocks. So, looking at the pre-market though, two highs here at the 52.60 level.
Market down 7 here now, so we've given back the quick gains that we had off the 830 number. We spiked up to about 1647. We've pulled back, trading 1643 now in the June futures. What do you think's going to happen here today? I know I was a little bit more bullish than you, and you were a little more bearish there yesterday. It's kind of right around where we made our bet at 1640. What's going to happen
Right.
today, Joel?
I think they're gonna. I don't think the low's in. I think they're gonna get it back under that 1640 level. Perhaps test a pre-market low, but then I think you start to see some bids stepping out ahead of that low 1632.75. That was the low from yesterday. The intraday high was a little bit higher than that, if that makes any sense. But if we do take out that 1632.75 level, Dennis. I'm not holding out for anything but 1620 here if the market really gets going. We have that triple bottom back from May 10th and May 13th.
That's our show for today, guys. Have a great trading day, and have a great long weekend actually. And we will be back with you guys on Tuesday.